So let's be real. You can't grow your business if you don't understand your numbers. So let's break down your profit and loss statement like a real CEO. All right. So let's talk about the report that most business owners, including myself, are too scared to actually look at. And that is the profit and loss statement, because this one document tells the truth about your business. There is no filter. It is all just facts. Your profit and loss statement, also known as your P&L, shows three main things: how much money you brought in for the month, how much money went out, and what's left. So if you want to make CEO level decisions, you have to look at this monthly, not just at tax time, but monthly. So the first thing that you want to know is, what's your income? What's coming in? So this section shows all of the revenue your business has earned, and that includes client payments, product sales, affiliate commissions, everything that hits your bank account that is income. But here's the catch. This is your gross income. That's before any bills, any taxes, or any payroll come out. So don't get too excited when you see $10,000 came in. The question is, how much of that do you keep? So that's where we get into the expenses. What's going out? So this is where most people lose their profit, right here in the expense column. Your expenses include things like your subscriptions, how much you pay your employees, how much you pay your vendors, how much you pay for office supplies, how much you pay on your marketing, how much you pay for travel, how much you spent on meals. Now, not all of the expenses are bad. Some are actually investments, but you can't control what you won't track. So if you are spending, let's say, $500 a month on tools that you don't use, $800 on random meals, and $1,000 on business travel that's really a girl's trip, your profits are gone before they ever hit your bank account. So the goal is simple. Cut what doesn't grow you money. That is where we get to net profit. What's left after the bills are paid. This is your bottom line, your real money. After every expense, this number tells you if your business is healthy or if it's struggling. So if it's positive, great. Now decide how much to pay yourself, how much to save for taxes, and how much to reinvest. If it's negative, don't panic. You need to analyze this. Ask yourself, did your income drop? Did your expenses rise? Was there a big one-time cost? Profit isn't just about what you earn. It's about what you keep consistently. So here's a bonus tip. You want to use percentages. So when you review your profit and loss statement, don't just look at the dollars. Look at the percentages. So if 40% of your income goes to expenses, that's manageable. But if 80% goes to your expenses, you're working for free. Numbers don't lie. They tell you where to focus. So when you start reviewing your P&L statements every month, you stop reacting and you start leading. You can plan ahead for taxes. You can spot the money leaks before they drown you. You can walk into a lender's office with confidence because you know how much money your money made. You know how much money you got left over, and you know how much money you can afford to pay back a loan. So if this actually helped you finally understand your profit and loss statement, hit follow. I teach financial clarity that turns hustlers into CEOs. And if you would like to get my definitive guide to building business credit, comment the word guide. It is the blueprint for building the structure and your stability.